let's just look at something now. One or two concepts when it comes to stop loss and entry is something that is made reference to as the buffering system. Before you take a trade, the broker don't joke with their spread. The spread is like the cost of taking a trade. So, and it is something you must bring into consideration before you buy or you sell. Now, if you are in a trade, sometimes you notice something, the market gets so close to your entry, but you don't get targeted. What really happened? I've discovered that over time, based on varying brokers and varying spread and cost of taking trades, you notice there's a wide margin of difference in spread. Sometimes you don't get tagged in, sometimes you get tagged in, and sometimes maybe you don't consider the spread in taking a trade, and it actually costs you an opportunity in the market. So that being said, let's quickly look at one or two ways you can buffer your entry and stop loss. Now, if you are trying to sell in the market, if you are selling in the market, it is expected of you to add the spread to your stop loss. Now, looking at my chart now, if I was trying to sell from this zone, for example, and now let me say my stop loss will be placed at this black line here, this line here, and the price of this line is looking at what we have here is 98203. So let me take, for example, if I have a spread of, let me type that out so it's going to help you. My stop loss is at 98203, for example. Let me move this way. Say this is my stop loss. Let me say this is my stop loss. If this is my stop loss, what do I have to do now? If my broker, maybe on the pair I'm taking the trade on, is giving me a spread of 2 pip, now I'll move my stop loss to when we'll factor in the spread into this trade. What do we have now? What you have to do, let me say we have a 2 pip stop loss, we have a 2 pip spread from the broker. You factor in the spread into your stop loss. What do I mean by factoring it in? You add the spread into your stop loss. So let me say if it's a pair with a 2 pip spread, you're going to be having 98223. Is that clear? Now let me say you are taking a trade of a 2 pip spread. So if you factor in the 2 pip spread, your final stop loss is going to be 0.98223. I believe this is clear to you. Now let's move into the buy scenario. When you are trying to sell, you put in the spread in your stop loss. Now it's not the same when you're trying to buy. When you are trying to buy, you factor in the spread into your entry. Let me say entry on those level now should have been 0.9, okay, 97623, and we'll have let me say a 2 pip spread likewise. For example, is just an example, and that means my final entry is going to be, now what do I have to do? I will add the spread to the entry price. So final entry price is going to be let me say the final entry price is going to be, so we'll just add it here. We should be having 64, so it's going to be 0.97643. So 0.97643. So that being said, when you are trying to buy, you factor in your spread at your entry price level, and when you are trying to sell, you factor in your spread at your stop loss price level. So thank you for now.